Out in Washington at the IMF is pressure mounting on world financial leaders to contain the European debt crisis. Our Sara Eisen is in the nation's capital with Olli, the man who continues to pledge not to abandon Greece. Sara.
Carol, good afternoon. Olli Rehn is here with me. His official title is Economic and Monetary Affairs Commissioner for Europe, but he likes to think of himself these days as the crisis fighter. Commissioner Rehn, 1 weekend ago, you and I were in Wrocław, Poland together. It's been a pretty busy week. Between then and now, we've seen financial markets spin out of control. We've seen more pressure from other world leaders on European leaders. How are you going to respond to that pressure?
You're right that we've had a very rough ride this week. And this is a further reason to ensure that we will very soon conclude the work related to the implementation of the decisions we took earlier concerning fiscal consolidation, concerning the new program for Greece if the conditions are met, and concerning the reinforcement and reform of the European Financial Stability Facility. These are necessary measures to be taken, and then we go on and we take further decisions.
One idea out there is for the ESM, the European Stability Mechanism, to be brought forward in implementation 1 year, 2012, ahead of schedule for 2013. What's your view on that?
Well, we are working on the basis of the timeline that we have agreed together, which is 2013. Now, the first and foremost challenge is to ensure that the reform of the EFSF will be ratified in all the national parliaments. This is going on in several parliaments. Some have done it already. The rest will do it either in the end of September or by mid-October. And it will be functional and operational as of second half of October onwards. Once that's done, we can then concentrate on further issues in economic governance and financial backstops, including the possibility of leveraging the EFSF resources.
Okay, you've been adamantly stating that Greece will not default. Is it you do not think that Greece will default, or you do not think that there will be an uncontrolled default? There's a difference.
Our view is that Greece is best served and Europe is best served by Greece rigorously implementing its EU-IMF program of fiscal adjustment and economic reform. That is the best way of reforming the Greek economy and society. It is hard, it is challenging for the Greek society and for the Greek people, but at the same time there is no other way, because Greece for long was living beyond its means. Now Europe is and the IMF are providing conditional assistance, and at the current juncture it is essential that Greece will meet the conditions by taking further measures on fiscal consolidation and structural reforms. This work is now going on, and I trust they will conclude this work very soon.
With 95% odds of default being priced into the credit markets right now, what are you so afraid of with the Greek default? Is it contagion? Is it the spillover in the banking system?
In fact, as part of the package agreed in July, there is already a very significant element of private sector involvement. It's a voluntary rollover and debt exchange, which together with the reduction of the interest rates and extension of loan maturities will lead to very substantial improvement of debt sustainability of Greece. We are talking about an impact of 20 to 25% of GDP when you take into account the EU policy decisions and private sector involvement. So we see that this is the way of working with Greece. In other words, in an organized way of reducing the debt burden, and at the same time giving Greece time to reform its economy and its society.
Are there any current plans under discussion to recapitalize the banking system in Europe?
These plans are going on. In fact, it's a work in progress, and following the stress tests we published last summer, we did in the first half of the year and published last summer, following these stress tests, 24 banks have a need to present remedial plans, which will involve raising funds either from the private markets, private capital markets, or if that is not possible, together with the member states, recapitalize these banks or restructure these banks. Now, one should also take into account that in the run-up to the stress test exercise, preemptively, European banks injected fresh capital worth 50 billion euros in the first half of this year. It's not peanuts. It's important, and as I said, of course, this work has to go on, and we need a more, even more consistent and common European approach in order to ensure that European banks are sufficiently recapitalized.
Well, that common unified approach is going to be a tough challenge. It is your challenge, and good luck. He's sticking with his story, Carol and Matt. That is Olli Rehn, the Economic and Monetary Affairs Commissioner for Europe, saying there is plans of recapitalizing European banks. They've been sticking to their plans also with Greece, and he's confident that they are going to be able to contain this crisis.
Well, and certainly the markets are hoping for that. Sara, thank you so much. Our Sara Eisen there at the IMF meeting in D.C.